What that means is if you're holding an asset, you don't access that discount, in real terms, you actually be paying an inflated amount of tax because the cost base hasn't been adjusted for the length or the period you actually held that property. So let's say you bought a property 10 years ago for $1 million. The cost base today is not $1 million, or if it is, it's not reflected in what the actual cost base would be today if you sell that for today's dollars. So it actually needs to be adjusted for that period. So when previously the government's floated about removing this 50% discount, economists have come in and said maybe a 33% discount would be applicable as more of a sort of meet in the middle. But you'll find that this is just purely a tax grab from the government trying to look at property holders out there and saying, okay, this is something we could raise a significant amount of revenue or additional tax over the coming period. And that's something that, plays well into, so they're looking at their constituents and potentially looking at, their forward projections around trying to raise additional revenue to cover off their additional expenditure under this current government. So really important. I know it's quite a dry subject, but it's really important to understand the origins of how we got here. This is not something that the Liberals necessarily pushed. It was part of the reform back in 1999. Things have changed in terms of the current environment around property, but it's really important to understand that how this could impact, if this does go through in its current positioning, how that's going to impact future investors. Thank you.